Welcome back to our budget brainstorm. We are discussing the big budget macro numbers and the assumptions that the budget may make while forecasting nominal GDP, tax growth, and therefore the kind of fiscal deficit and market borrowing that it might go with. We've been speaking with Sonal Verma, the Chief Economist of Nomura India, and Neelkant Mishra, the Chief Equity Strategist India and Asia Pacific for Credit Suisse, also member of the PMEAC. Okay, Neelkant ended by saying that he expects that the budget will be actually conservative and the reality will be the fiscal deficit will turn out to be lower than what the budget will forecast. But first, what is it likely to forecast, Sonal? Last year, before pre-COVID, estimation was about an 8 lakh crore fiscal deficit. Do you think this year the budget will make bold and assume a larger fiscal deficit because, it wants to stimulate the economy? That has not been the government's behavior this time. But what are your estimation? What are your assumptions for FY22 budget?
Sure, Lata. I think one thing I do want to point out is that if the government makes too conservative an assumption, ultimately the market borrowing numbers are based on that. That would actually send a signal that the borrowings are going to be very high. So I think the government also needs to, of course, not be over optimistic, but the numbers need to be realistic. Otherwise, we'll end up borrowing, a lot more than is sort of necessary and sending a very aggressive signal on the borrowing side to start off with. So that was one. In terms of the broader fiscal target for next year, I think, the question is what are we going to end up FY21 with? What we have seen is actually a positive surprise on the fiscal side this year. Early on, when revenues were weaker, the government actually did go slow on spending. And now, as revenues are picking up, expenditure has picked up. But on aggregate, fiscal deficit looks like it'll end up being closer to, on our estimates, about 7% of GDP for the center this year. Now, looking ahead, I think there are 2-3 things that the government needs to sort of keep in mind. First, if the overall economy is normalizing, then even the path has to be towards sort of fiscal normalization. So our expectation, therefore, is that the fiscal deficit from about 7% will probably be pegged at around 5.5% of GDP. Second, the timing of the spending is also going to be critical because the economy, until the vaccine, will still need a lot more fiscal support. And therefore, the spending will need to be a lot more front-loaded even in FY22. And third, it needs to be a lot more targeted. Last year, of course, the focus has been more on sort of survival support kind of fiscal measures. As we look forward, the allocations need to be a lot more around, of course, health and vaccine-related costs. It needs to be a lot more on infrastructure kind of spending. So more consolidation, B, more front-loaded, and C, more targeted is sort of the broad approach we expect the government to take.
Okay. What are your expectations, Neelkant? Do you think 5.5% was what Sonal is going with? Your fiscal deficit expectations, and broadly in terms of expense, do you think we should expect a larger capex expenditure number, or not so because you have a vaccine expense?
No. So see, again, when we are doing this exercise, we need to be cognizant and in your own mind have one, what you would like to see happen, and second, what is likely to happen, right? So, and so those are two different things. I agree with Sonal that I think this year's number, and I've seen numbers of economists at 8% for FY21 and all that, which I think is unlikely to happen. I think it won't be that high. The way I arrive at some of these is to look at what has happened to borrowing and what is the nominal. So I was at, I would have expected 6.5 till yesterday, but the nominal GDP number that the CSO gave was 7%. So it's now 6.6%. Because if you assume what the government borrowing target is and assume that there is $500 billion extra that they will get from other sources of financing the deficit, then we are talking about it, 12.6 trillion rupees or some in that ballpark, the fiscal deficit, and which means a 6.6% ratio. But it could be 7, right? If there are other sources the government taps into, it is quite possible that we get there. Next year is the tricky one. Next year, I think, if we are talking about even a 12-13% nominal GDP growth and some kind of tax buoyancy. I mean, I wouldn't expect a lot of it because remember that this year excise duty has already delivered quite a bit of growth and it was active for a large part of the financial year. But if you assume a reasonable number, and next year most likely you'll have to do some assumptions on disinvestment and all of that, I think the deficit number would be dependent on how much the government can realistically spend. From the perspective of positioning, it is very clear that the market is assuming that the deficit will be higher. So the 3%, etc., that we used to talk about a year back is not likely anytime soon, and therefore, if you give a higher number, no one is going to get shocked.
5.5 is okay.
I'm not saying that, so I don't want to put a number which I have not published. So, okay. So the thing is that because you have to understand that when you are setting up the budget, will you shock the market? Exactly what Sonal was saying, that, will you come up with a borrowing target, which is really surprising? My sense is that the government is likely to be more cognizant of how much can it spend. We tend to assume that the government can spend at will. Right? It is not that easy. In fact, you may have seen that in the September quarter, the GFC fell nearly 20% year on year.
Right.
Right, and this is partly because of the fiscal stresses at some points, but mostly because you and I can work from home, but in the government, mostly physical files have to move from one point to the other. And a lot of work got stalled, and which is why now you are seeing the expenditure growth really pick up. There are restrictions. There is an inertia. There is only you can spend on a few things, right? So you can press a button and deposit into people's bank.
Can I say your assumption is not for a big fiscal stimulus and not for a big capex?
See, the expenditure number can be higher. I mean, an expenditure number. The question to ask is how much higher. Right. So if you build in certain assumptions on, say, salary and pension and all of those, I think the expenditure can be higher. Now the question is how much higher, and if you actually assume 13-15% kind of tax revenue growth, you would wonder where the government is going to spend it. So I think the fiscal and the good thing is that the market is anchored towards 5.5 to 6%.
Okay.
So the government will have a fair and you have to remember that a lot of the expenditure this year will not repeat next year. Okay. Not a lot, a reasonable part of the expenditure this year will not. You're not going to be needing to give free grains and
that's true.
Excessive Narega and all of that. So, and then like the clearance of the fertilizer subsidy arrears, those are things it's one-off, right? So you won't have that next year.
Okay.
So I think as the government sets about setting the fiscal deficit target, it would need to do some sensitivity around what revenue growth should it assume, how much disinvestment it can do realistically, and also how much can it really spend, and then arrive at the fiscal deficit.
All right, fine. I guess we will have to do another session to get the exact fix on what the market is expecting by way of expenditure numbers, 20 lakh crore or 26 lakh crore. It could vary. I want 2 quick questions because I'm being warned I'm overshooting on time. Do you think the cost of money can rise? Quick answers from both of you, if possible, in 10 seconds. Because, RBI will have to normalize liquidity. And as you say, there is a commodity inflation. So, Sonal, do you think the 10-year would be like 6, 6.5? Where are you seeing it? Say in the second half.
Yeah, Lata, I mean, probably a gradual increase in the second half. But I think in general, RBI would be wary of too sharp an increase. So we are going to see more active RBI operation twist, etc., to also keep the long end a bit more anchored. So shouldn't be runaway, but yes, trending higher.
6.5 is okay, you think? Neelkant?
Yeah.
No, I think that, I mean, I would not expect, so there will be, I think, my sense is that as the food inflation starts to cool off, and my own expectation is that some of the commodity inflation will not last beyond 6-9 months, because what we are seeing now is a lot of the supply chain bullwhip, which is hitting globally, which is why there's a shortage of steel, there's a shortage of some semiconductors, there's a shortage of copper,
Yes.
a shortage of plastics. But the aggregate demand, if you think ex-China, actually 2021 itself is not going to be higher than 2019. So I don't think this is a sustainable growth that we are seeing in commodities, and there should be, I think, a possibility of continued sort of low bond yields as we go into the second half of the next year.
All right. So you both agree that it cannot be too much, but maybe some rise in bond yields is possible. Sonal, Neelkant, thank you very much for kickstarting our budget brainstorm discussions on the big numbers. Preliminary numbers from our economists is that the government can assume 17-18% nominal GDP growth, but it is likely to assume something more conservative so as not to upset the markets, and therefore probably you will not see too much of fiscal pressure because it will end up borrowing less than it can. Well, that's the preliminary expectation. Let's wait and see how things pan out from here on. We wrap up this budget brainstorm. Stay on with us. There's lots lined up for you.